Hello children, you are welcome to the digital classes of Christchurch Convent Gadarwara. I am Amit Toshniwal, your account teacher. This video is for class 12, subject is account, chapter number 7, issue of shares, part 6. In this video we shall study two topics, call in arrears and call in advance. Call in arrears means the unpaid money by shareholders. When calls are made for shares, then shareholder is asked to make the payments. In case if some of the shareholders are incapable or unable to make the payments, then such unpaid payment is called call in arrears. So this is the money which has not been received by the company so far, and that will be received in upcoming future. Okay, so for this company can record such amount by two ways, either without opening calls in arrears account. When it happens and amount is called by the company but not received, so company may cannot open call in arrears because less amount is received by bank, and amount after calls in arrears is debited to bank account. So this way it is clear that debit balance remains in calls account, which shows some amount has not been received. So this it means company will not open call in arrears account. Second method may be by opening call in arrears account. So by the time when call is made, when call falls due and it is received, so some money is not received in the bank, and then respective call is debited and share capital account is credited with full amount. And when this amount is received, bank account is debited with the amount received, and unpaid amount is debited to call in arrears account, and call account is credited with full amount. So when arrears is received, bank account is debited and call in arrears account is credited. So this amount is subtracted from subscribed capital amount on the equity and liability section of the balance sheet. Okay, then third point, when they are not paying money, so company may call some interest. So company is authorized to take a charge on call in arrears at a specified rate which is mentioned in the articles. If there is no provision for an interest, then table F of the Company Act is applicable. So according to that, 10% per annum interest can be charged from the due date to the date of actual payment, and directors of the company can waive the interest if they feel it appropriate. Waive it means माफ कर सकते हैं उसे वो. So this is a revenue profit, and it is shown in the statement of profit and loss of company. This is not a capital profit. Revenue profit, it happens now and then. That is why it is a revenue profit. So what entries are made for interest on calls in arrears? So these entries will be made. First, when interest becomes due, then shareholders account is debited to interest on call, because interest is a revenue profit, therefore that will be credited, and shareholder is liable to make the payment, therefore shareholders account will be debited. And when interest is received, so money comes into the bank, therefore bank account is debited to calls in arrears account, that will be closed, and to shareholders account. Okay, now what is call in advance? Call in advance means when money received at the time of application is excess and it is not returned back to the shareholders, and that amount will be adjusted or settled in the future calls. So this is called call in advance. Okay, so for this accounting of call in advance, it is received, so it is credited to a newly opened account which is called call in advance account, and it will be adjusted definitely in future when call is received. So that time shareholder will make a little less payment, means the money which already is deposited with into the bank with the company, so that much amount shareholder will not pay. So that time call in advance account is debited and respective call account is credited. So when call in advance account is opened, so it was credited, just to close it will debit it. So till this amount is not adjusted to the respective calls, it appears on the equity and liability section of the balance sheet. Second, definitely when amount is not paid, company charges an interest. So likewise, when amount is already deposited with the company and company is not returning it back, so company is liable to pay an interest of 12% per annum if it is not pre-decided. So table F is important for this. If articles of the company are silent on the matter of interest of call in advance, then table F applicable, and according to that 12% per annum interest will be provided. Otherwise, whatever is already pre-decided. Okay, so now you can solve some of the questions based on that, numericals up to 17 and questions up to 20. So solve these questions in your fair copy. In next video we shall continue with the balance sheet of the company. Thank you.